This is a market update for Chicago, Illinois, September 2015, presented by Chicago City Estates. Today I want to discuss current market prices. Real estate has been on quite a roller coaster over the past 10 years. This graph illustrates how prices have changed from 1975 to today. For a solid 15 years, from 1975 to 1990, the prices of homes hummed along rather predictably, rising at about 3.6% per year. The 90s saw a dip in price right before the spike of the 2000s housing boom. The green and red line in this graph represent the highest and lowest point experienced back when the market was predictably steady. We can see that during the boom, prices skyrocketed beyond the previous norm. When the bubble burst and the prices dropped, they barely dropped below norm, and in the aftermath, we can see that prices are starting to even out and find their place back in that trajectory. This means if there was never a bubble and prices simply increased by about 3.6% from 1975 to today, they would be right about where they are now. After the bust, inventory levels skyrocketed and prices dropped dramatically. In 2011, inventory levels reached their peak at nearly 10 months. It took about 2 years to clear that all out, and inventory levels have been evening out over the past 3 years. They are currently around 5 months. While this is much better than 10 months, it's still not a fully recovered market. This chart shows what impact on the market the month supply of inventory has. In 2011, when there was nearly 10 months of inventory, we were in a super hot buyer's market. Remember in the first slide, we could see that this is when prices hit rock bottom. Inventory then plummeted, and the month supply was rather neutral through most of 2012. As the market has been leveling off, however, fewer people are moving. Perhaps they bought at the height of the market and are keeping their fingers crossed for their home to continue to increase in value. Perhaps they scored a super deal when the market crashed, and they are set for many years to come. No matter the case, since 2013, the nation has been in a seller's market. Home prices are appreciating, but as we saw in the first slide, they are leveling off and no longer skyrocketing. Looking at these same numbers for the city of Chicago, we can see that over the past 2.5 years, we have seen a steady increase in prices. In July of 2013, the average price was $327,553. That price increased by 8.5% to $355,662 in July 2014, and over the past year has increased by 4.7% to $372,483. Prices are still increasing over the 3.6% that we are seeing across the whole country. However, they are slowing. Inventory in Chicago is a slightly different story. It has been low this entire time, pushing prices up as we see. However, it is not increasing at the rate that prices are increasing. There was a slight increase between July 2013 and July 2014, from 4.6 months to 5.1, but the current inventory rates are nearly the lowest they have been in this time frame at 4.2 months. If inventory continues to be low, we might see another push up in prices as Chicago's market finds its balance. Please see the charts in the blog post below to see how inventory and prices have changed over the years in the downtown neighborhoods.